All right. Welcome to a new daily recap. Let's discuss what happened today. Um, and let's break down price. One moment. Don't mind my nose. Don't mind anything. I'm sick, or I'm getting sick. I feel like I'm getting sick, but I don't want to get sick, bro. I have shit to do. I have to attend my stuff. All right. So, starting on the daily time frame, structure-wise, where are we? We broke above these highs, breaking bullish on the yellow structure, liquidity taken, highs taken. We're above old highs inside the daily PY. We still got some liquidity to the upside, but overall we got this bullish range from low up to high. And ideally we want to achieve a discount on that now because now we're above these highs. So bias wise, what can we say? Our bias is on the lower time frame, it's long, but on the high time frame, it's short because we're above all highs and inside this bearish daily POI, if that makes sense. Liquidity wise, we're also short. Why? Got a lot of internal range liquidity now building up over here. And if anything, it could be like a fake bullish break, and we got liquidity building up here at the lows, so we can break bearish. And internal range liquidity, external range liquidity taken, so we can turn around from here. So yeah, as you can see on here on the daily, we can see that these wicks were forming. And then I think it was last Wednesday. Yeah, Wednesday we formed this high and it basically took out all these highs. So liquidity taken, and we closed fairly bearish, or a lot of bearish hands stepped in after taking that, and we closed like that. And then Thursday and Friday we stayed within, coming into Monday, taking out the high, taking out the previous weekly high, creating this high, respecting this 1 hour POI that sits within our daily POI. And now today we took a previous daily low, so Monday's low, and we're going bullish. I think we can go to the upside now, following that range, because when we go lower, we can see that internal range liquidity is taken. But let's see how today closes, because for now it's not really strong, and we're still inside this candle. Although we took out the low, so we might take out the high. 4 hour wise, what can we see? Same story. We're above all highs and liquidity taken over here. These were these daily highs taken. And now we have let's see over here. Actually, we are above this high, and then this is our range from low up to high. And we can see price coming into this range or into the discount. But for now, they're not clear sign. There's no clear sign. Then we got some trendline liquidity building up over here as well. So there's a lot of liquidity building up, but unless we get a sign of selling on the high time frame, the the long trades are high probability. Then going on the low time frame or lower. Let's go a little bit lower, just not the lowest time frame. Actually, yeah. Coming into today, you can see took Asia high, took us on internal range liquidity and some lows. We have still this bearish range. We got a high, low, lower high, lower low. However, this was our bullish range from this low up to this high over here. And what we basically can see is that this was our first point where we came into the discount, and we took some internal range liquidity, but not much. And this was the reason why I didn't take the trade on Monday over here, because I was favoring lower prices before we could long. And as you can see, we basically respected a 50-minute PI over here, and we took out these lows, and now we got a strong bullish push to the upside. So this was actually the move I was waiting for. Didn't happen. I tried to short here today. Shorts were clean, just not my entry drill presented, but it took me out before going lower. All good. Followed the plan, so that's good, and I know the plan works. So this is our range. Then let's go to 30-minute. We can see why I took this area, why I thought this was a strong POI, not just because it had the liquidity buff, but if we go lower, you can see from our POI how to select this POI, why I chose this POI. Got a low, high, a higher low, a high, high, bearish break. So this is basically disruption of lows, and then this high. And on the 5-minute, we had this fair value gap. 5M FVG fair value gap as well. So I was favoring shorts from either this 50-minute block or even below this 5-minute fair value gap, because as you can see on the 3-minute, this was the block that took liquidity. So let's mark that out. There you go, early. I'm just doing a different color so it's more visible. Out of replay mode, go to the 15-minute, and as you can see, where price react from is exactly. Oh, and I'm curious. Hold up, let me go back. Let's see if there's a 1-minute block. Clean. There you go. So 1-minute block. Let me see. So could either use this one, although it kind of tapped in. Let's just mark it out as well. Let's remove the 3-minute. Oh, let's remove this one. And actually, if you look at this one, we could maybe even say, let's take this wick. So that being said, we still think this area above. So like this. All right, now let's see where if we mitigated that 1-minute. There you go. Oops. Zoom out. So let's take off the fair value gap, because we don't need that anymore. And let's extend this one. Perfect. Okay, so as you can see, the 1-minute extreme block that took out the liquidity, actually that wick that took out the low, and then if you say it in English, it moved price higher from here. So that was the low that then led to a new high, basically fake out and then continuation. And as you can see, price reacted from there. POI 1-minute. Disruption of low. So then coming into today, what happened? This is how we started, or this yesterday, but price left on the 5-minute is POI, large fair value gap. So if anything, you can maybe look for shorts with the from below here. I was looking for shorts from below there, but why? Oh yeah, because on the 15-minute we had this order block, as you can see. So I was saying like, all right, we can maybe look for longs below this low, but actually price came lower. And I had two high probability areas, which was this block, as you can see. I'm just gonna mark it out. This or area and this area. Unfortunately, I took 2 trades here, so I was not allowed to trade anymore. But yeah. Then going lower, what can we see? Asia high. Just before Asia high, we get some early sellers. Let's go on a 1-minute. I feel this breakdown is a bit messy, but it's all right. So just before we get to Asia high, we get these early sellers. I think because there was some supportive resistance, because you can see over here, we got this cluster, and we got some reaction from an area. So let's actually take the cluster and drag it to the right. And as you can see, there you go. You got your support and resistance area, aka your shit box, how Krishna calls it. And you got a low. Here price stumbles and goes up. And over here price stumbles, goes down. Resistance area, taps in, goes further down, taps in, creates Asia high, goes down, respects this bullish order flow, low, high, higher, low, higher, high, higher, low, higher, high. Then tricks support and resistance traders into selling by breaking barriers. So maybe some smart money traders as well that use that. And then price goes down, as you can see, wicks through again, goes up, respects, goes up, respects, goes up, breaks through, respects, goes down. So yeah. And even over here, it still respects this area. So yeah. All right, then we got the entry drill over here. Early sellers. Oh, my bad. Let me zoom in. Early sellers, low, high, higher, low, higher, high, bearish break, entry, fill, came up. So this is a new form. This is a second set of early sellers. Came up, bearish break to the downside. There you go. And then price respected something over here, and I tried to sell here. So over here I got a loss, and over here I got my second loss. As this was the last unmitigated area, but price respected this higher buy to sell candle. Unfortunate, but this fitted my plan, so I'm okay with it. Then price comes lower, and what can we see about except for, or how do you say that? Not just because there was that support and resistance, but from a smart money or liquidity perspective, we took internal range liquidity, price spikes too. There's no more liquidity to take if there is any liquidity. So price continues down, and then you can see Asia low over here. And after we take Asia low, we get a bullish move, and this could be classed by people as minor break. So we can class this as our early buyers. And then as price comes lower, we get a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And basically you have your break structure over here. Just a wick, but a break is a break. And this, I was not allowed to trade, and this the entry is outside of my trade time anyway. But there you go. The last unmitigated area. PY, and here you can see this time this was the last unmitigated area. The price respects it, and you get your long entry below this wick. Stops 0.5 hit below, 0.4. Let's choose 2.5. And it's a bit of a hard trade, You can target this internal range liquidity because we got a high, a low. So first range, and lower high. Hope this is visible. Lower low, because you use a lot of the same colors. You can see we reached the premium, lower high, and then lower low. So for me, this would have been a break-even trade. Why? Oh no, reduce. Oh, actually, it would have been a win. Why? We break above here, so we can reduce the stop loss below this low. There's not much to reduce, just 0.5 pips. And then as we break above here, we can see that actually that's not the right one, but you see it. All right, let me do it properly. This is the right one. And after we follow we respect the order flow, this is our last block. This one isn't, so that means that we can move our stops to break even because there's no PY sitting in our area. And actually I should put my stop loss here, but second break even because we reached the 50% of this high that led to this low. So break even for me anyway. As you can see, let me just put it back for the risk to reward. Price reaches 125 before hitting that internal range liquidity. So there you have it. There you go. Targeting the internal range liquidity. 1 to 6.12. And then price comes down, bearish break, bullish break. So this is basically your early sellers. Early sellers taken out, bearish break again. And then we keep respecting this bullish order flow. So yeah, but that's not important because this is all, how do you say it? This is all in the dead zone. I call it the dead zone. But very important is that we are building up a lot of liquidity to the downside over here, as you can see. So let's remove the 5-minute block. After we take the highs, we can take the lows. And what does price do? Price takes the internal highs, and we get large early sellers, if you can call it that, over here. Then we reach into the extreme of this leg down, and price takes out all liquidity that's building up over here. Look at how clean it is. Tap, 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 tap. So liquidity. I can actually just mark it as a line. Hold up, it looks looking cleaner. So, and then what do we get? Price respecting from that 1-minute block that created the disruption. And then price breaks bullish again. However, we still have, as I said, this high, low, lower high, lower low going on. So bit tricky to look for longs, although we got now this structure, that high, low, lower high, lower low, lower high, lower low, bullish break. It's lining up with our 1 hour time frame. We still have this bearish one. So ideally, want to see this one taken and then price coming down, and then we can look for entries. So for tomorrow, might look for shorts above here. Gotta see. Let's see what's on the 50-minute. Yeah. Oh yeah, I remember. We still have this 50-minute PY over here. Actually, let's take the 30-minute so we can take out the. There you go. So we got this 30-minute POI. Then this is classed as internal range liquidity, so we can look above that wick, and that seems to me like a valid area to sell from. However, we already took a lot of internal range liquidity, so we just might better look for longs from here. As you can see, we have this 50-minute, actually, with this 50-minute POI over here. So we might look for longs from here in this area, because now we got this high and this high. This high just took out that high, but yeah, there you go. Can do it like that. I prefer longs now, but we'll see. What we now can do is clean this up, clean this up, clean this up, and clean up this over here. I don't know if there's something here. Asia high has been taken, Asia low has been taken. This one is not important. Previous daily low has been taken. This is our new previous daily low. But we can like mark this as liquidity. So yeah, there you go. And let's take out that. Lows are taken, highs can be taken, and then we can look for longs, for shorts. That's basically it. Let's just follow that for now. Let's actually mark this out for tomorrow. I hope I'm not sick tomorrow. This will be the ideal situation. take out the highs and take out the lows that led to the highs. And then we take out the highs that led to this low, and then we break bullish. And then we have a new bullish range from this low to this high. And then we can see price maybe trickle down, break bullish again, fake out people, break bearish again, discount, break, bullish break. Oh shit, doesn't fit. Can I? Ooh, nice. There you go. And then maybe respect this, and then finally break bearish, then trap out, and then continuation. There you go. This is a possible scenario. This is also NFT art. Let me uh, uh, hold up. I don't know if you guys can see this, but I'm gonna beautiful. Did it save? Yeah. So that's a possible scenario. Let's see. Leave this on. All right, this was the daily recap. Oh, my bad. So after we come into this, after we take out the lows over here, shit, man, I forgot this. Take out the lows, you come to this 50-minute POI, and I think there's no entry drill for me. There's early buyers for sure. There you go, you got your early buyers. As we said, we have some early buyers over here, but that's too far away. Low, high, low, lower, high, lower, low. Bullish break, bearish break, another bullish break. Let's see. Yeah, let's class. If it breaks below, doesn't. That's shit. Didn't go. All right. This is a. Oh, actually, let me check something. Something wrong. Yeah, perfect. Okay, so you get your. You gotta. As I said, I had all this structure marked out over here. I love this color. I don't know why, but I love it. Can I make it smaller? No. Okay, so we get this high, low, lower high, lower low, bullish break, bullish break, bullish break, bearish break, bullish break, continuation down, bullish break. Just for you to see it. Oops. Low that led to a high, respecting the range, even taking out some internal range liquidity over here. So that's all valid. And then you got your bearish break. Oh, you hear my voice? Damn. You got a bearish break. Shit, man. Bearish break, bullish break. So this is your early buyers. Early with the liquidity building up to the downside. Then you get over here, internal range structure. You got, this is your latest bearish range. This is a bit tricky though, but you got internal range liquidity over here for this bearish range, which you want to be taken before looking for shorts anyway. So, because these are the highs that led to these lows. Then you got your high. Let me see if that's valid. I hope it is. Perfect. Okay. Then you got your high, your low. Oh, wrong color. My bad. You get your high. You have your low. Oh, low, lower high, lower low, lower high, lower low. Bullish break. Early sellers, early buyers over here. Bullish break. Market surgery right now. Bullish POS. And as you can see, there's no entry because this is the last mitigated block. There's no reason to take this one. On the 3-minute, I think there is an entry. Nope, it's 1 pip, I think. 48, 62, 1.2 pips. So that's no entry either. Well, if you are a fair value gap trader, in 2 minute, yeah. So for the 2 minute, this is your fair value gap. You can take 50% of the fair value gap, put your stops below the block, and that's the largest entry, but it's a valid entry anyway, nonetheless. And you hit 1 to 3. You hit 1 to 3, but not before breaking the high. So you would go break even after hitting the 50% again, or break even after taking this internal range liquidity for the overall range from this high down to this low. This is your internal range liquidity. And so that could be your target, which is a 1 to 2.9. Yeah. So that's one for sure. So that's a trade you could take. Doesn't fit my entry plan. That's too much of a breathing room. And let me clean it up. So yeah, that's it. That's the daily recap. Back tomorrow. Hopefully we get an entry. If not, we don't enter. Hopefully we get it. If we get an entry, our entry drill gets respected. And if not, so be it again. But we do what we can. All right, peace out.